SEBI has barred the global trading giant Jane Street $570 million, 4,800 crore rupees.
SEBI has barred US trading firm Jane Street.
Alleged manipulation.
It's
manipulation.
Market manipulation.
Imagine a global trading giant known for its lightning-fast algorithms, massive profits, suddenly being banned from one of the hottest emerging markets. Not just banned, but basically ordered to cough up around 4,800 crores in illegal gains. This isn't fiction. This is actually happening, and this is the crackdown by SEBI over Jane Street for its alleged market manipulation in India. Now, what did they really do? How did they shake up the Indian stocks? Why are your potential holdings like BSE, Nuvama, Angel One, CDSL, why are they down? If you are invested in them for the long term, is your investment thesis still intact? Stick around, because we are going to dive deep and discuss the real truth behind the Jane Street market manipulation incident. And welcome to another episode of Finfluenced, and let's get started. So SEBI's investigation actually paints a very sophisticated systemic market manipulation, primarily due to using two strategies. And let's talk about the first one. The first one, what they did was they did an index manipulation in the intraday. Let's take Bank Nifty. Now, Bank Nifty is consisting of a lot of banks. Of course, that's why it's called Bank Nifty. But these indexes are weighted based on the market cap of the stock. So HDFC Bank, being the most valuable stock, has the highest weightage in that index. I'm not saying that, or I don't find evidence that HDFC Bank was a bank that was used as a tool or as a stock or as a security to manipulate the markets. But what they did was, Jane Street in the morning would aggressively buy Bank Nifty stocks and Bank Nifty futures. And we are talking massive volumes here, right? Volumes in the order of 4,000, 5,000 crores in a single day, right? And by doing this, they would artificially move up the index price. The index would be inflated. And this would create sort of for us retail investors, we would see that, okay, Bank Nifty is going in an upward momentum, wow. But simultaneously, what they were doing, what Jane Street was doing, was they were also building a huge bearish position. So they would go to the options market and they would buy put options, which is basically shorting or betting that the market would go down. Why? Because when the market goes up, the put options are cheaper. They would buy like 30,000-40,000 crores of put options, and they were just betting that the index would fall. But why would it fall? They themselves just bought a lot of stocks in the index, right? So why would the index fall? The index would fall because in the same day, the stocks, the futures that they bought in the morning, they would sell them in the afternoon and just dump their entire holdings in the market, upwards of 4,000, 5,000 crores. And this would again drive the index down. So while in the morning they would push the index up, we as retail investors would see that index is going up. We would go and buy the stocks because we want to ride that momentum. In the background, Jane Street would bet that the market would go down, and then they would themselves dump their own positions while capitalizing on the leverage that they have in the options market in the short calls that they have. And they would get massive profits out of this. For example, dumping the stocks in the market and their futures losses would just amount to about 60-70 crores. But they would gain around 600-700 crores. So they would gain 10 times the absolute amount of their losses. That is a very strategic way of making money in the market. This is strategy one of their market manipulation. What is the other thing that they did? The strategy two was, during the extended market close, what they were doing was they were artificially influencing the index's closing price. And how? Now, Jane Street would actually execute a substantial aggressive selling of the index component right at the market close that we've just discussed, right? But that also would suppress the final sentiment of the price of the index. So while in the morning it would look like the index is going up, Jane Street would actually ensure that it doesn't stay that way, right? But why would they do that? They would do that to ensure that their pre-existing short call or long put options or any other options that they have, they would settle the final index price in their own favor. And in the SEBI report, SEBI itself noted that they continued this activity even after NSE gave them a warning. And this wasn't just aggressive trading. I mean, in my opinion, this was just a calculated market distortion, a market manipulation, right? And this has been happening since January 2023 till March 2025, at least till the time that I can see the data. So at least for 2.5 years, they have been doing this, and they've, if the reports are to be trusted, have allegedly ranked around 43,000 crores from options, while strategically taking 7,000 crores in losses in stock futures, and about 200 crores losses in index futures, and about 300 crores in losses in cash equities. But the losses compared to the profits are just, they're orders of magnitude big, right? And this was strategically calculated just to get those magnanimous gains. So with such a bombshell dropping, how did the Indian stock market react, especially for those stocks that you are probably invested in? The news sent immediate shockwaves, hitting stocks perceived to be connected or exposed or in relation with this incident. And the first one to be hit was Nuvama Wealth Management, a staggering 10.6% in a single day. Why? I just can't make sense of it. Because Nuvama was, although it was identified as Jane Street's on-ground execution partner in India, SEBI itself did not accuse Nuvama for this activity directly, right? So it seems like there's a guilt by association, what I read, and investors are worried about lost institutional business and reputational damage. But if you talk numbers, I don't see any substantial change in the fundamentals of the company. Yes, they've lost a partner, but they can also gain a partner. They are a very strong company in terms of their management, in terms of their infrastructure, in terms of their reputation, in terms of their execution, right? So that is one. But the other is BSE, Bombay Stock Exchange. Bombay Stock Exchange nearly fell around 7.3%. And people think that because they were operating on the index, there must be a volume decline that BSE would be facing. But if you look at the data, right, not really. I mean, the trading volumes on BSE were less than 1% by Jane Street, contributed by Jane Street. And all other foreign portfolio investors, or FPIs as they call it, combined only account for 4% of BSE's total volume. So the drop here was largely sentimental, a broader market reaction to potential reduced derivatives trading if other big players are pulled back, because SEBI has, freeze their accounts, banned them from the markets. Can this be extended to other FPIs if it is detected that other players were also doing it? Then probably a larger chunk of volume can be affected. But so far it is just less than 1%, right? So let's see what happens on Monday when the market opens, right? The other stock, again, Angel One. Now, Angel One is a retail brokerage, but it also saw a drop of around 7.5%. Now, Jane Street is not a direct client of Angel One, but it is a facilitator for the futures and options, right? So it is indirectly affected because FNO trading, a major FPI player, has been eliminated from the FNO trading activities. While Angel One's revenue comes around 77 to 85% from FNO trading, there's a concern that out of that, around 50% of the trading activity comes from these FPIs, these trading firms, and the reduced activity could actually impact the FNO market for Angel One to the magnitude of 30-35%. This is yet to be seen in their statements. So while Angel One is actually, in my eyes, the biggest to be impacted in terms of pure numbers and not just sentiments, it is a very big player in the market. It could be that they will suffer for a couple of quarters, but with the loss of a client, there's always an opportunity to gain another client, right? And finally, CDSL. Now, CDSL, I also cannot see why they fell. It could be just that broader capital market stocks were falling. That is why CDSL took a minor hit of 2%, or probably just it was overextended, and combined with the news, people just made sure that they are out of all capital market stocks. But if you look at the fundamental business, they are still the dominant market player with around 80% market share, 79% market share, and which has been growing at a healthy pace of 30% a year. So while the short-term sentiment with the Jane Street news is bad, but a direct impact on CDSL due to the Jane Street incident, I don't think it is significant at all. So given this incident, is the long-term investment thesis for these stocks still intact, or will this cause a major fundamental change? Now for BSE and CDSL, the long-term thesis remains intact. It appears to be intact. They are major market infrastructure providers and benefiting from India's overall economic growth, even from the retail economic growth, not just FPIs. Their business models are robust, and it's less reliant on a single trading firm, right? On the other hand, Nuvama, despite the initial shock of around 10-11% of a stock decline, has a strong underlying fundamentals. It has a diversified wealth management business. It has robust financials. It has an ROE of around 24-25%. The impact seems more sentiment driven than a fundamental hit. But Angel One might face some short-term headwinds because of a decrease in FNO activity. That is because of a major chunk of their revenue comes from there. Now, their revenue may not grow at around 30-31% year on year as it was growing before, but overall with the India's economic growth, they are still well positioned as one of the biggest companies to be benefited from that. If you are finding this breakdown helpful, please hit the like button, and please hit the subscribe button, and subscribe to Finfluenced in general for more such in-depth market analysis and market moving events, right? And we also drive another series where we discuss about our AI related stock portfolio, and you can see some thumbnails out here, and even this video's thumbnail indicates the current holding value of that stock portfolio. We are making some changes, so we will not discuss the AI stock portfolio right now, but just to maintain the trend, I've added the current portfolio value on the thumbnail. We will come back with an updated way of sharing this portfolio, and I am listing down the current holdings that I have here and what are their current values, and we will get back to you with the AI related portfolio really soon. But please like and subscribe, it really helps us. And moving forward, let's take a slightly controversial take on this, right? While SEBI's action is undeniably strong and aims to protect the market integrity, some might argue, was Jane Street truly manipulating, or was it simply exploiting a loophole that it found, or some inefficiencies by the regulators that they were just too slow to address, right? I mean, this has been happening since 2.5 years. Is this ban in some ways actually bad for the market efficiency? I mean, you have just removed or eliminated a major liquidity provider. They've been trading on the orders of 4,000, 5,000 crores, and that's not a small amount, right? So now it's a complex debate. I mean, we have to look at both sides of the coin, being unbiased. While I am not a financial advisor and my tools are not qualified to provide financial advice, us as retail investors, we have to look from an objective plane, right? While what Jane Street did was manipulating the market, but we also need to see why was this going around for so long, right? I want to hear this from you. What are your thoughts on this, right? Do you think Jane Street was a blatant manipulator, or they were just playing by the rules and just found some loopholes that already existed, right? And do you believe that this ban will ultimately make the Indian market stronger, or will it just stifle the innovation, or just smother the liquidity around, right? Let me know in the comments below. The Jane Street incident is a powerful reminder that even in rapidly growing markets, vigilance is key. SEBI's decisive action, it signals a new era of, I would say, a stricter oversight, aiming for a fairer and more transparent market for everyone. I mean, SEBI has grown, or even was established for that matter, because of such unjustified activities happening in the market. So with every new incident that is discovered, it's not that we are just trying to control, or they are just trying to control the market in disguise of investor protection, right? They are actually making the markets more mature in some ways, right? So while the short-term volatility is expected, over the long-term outlook, the Indian capital markets still remain robust, right? Because they're driven by fundamental growth. And there's a commitment to integrity just by resolving these kind of issues, which although have gone unaddressed for quite some time, but better late than never, right? So yeah, thanks for watching, and remember to stay informed, stay invested, and we'll see you in the next one. Bye.
कभी मेरे ख्वाब सा, कभी उलझे जवाब सा, कि चंदा में भी दाग सा, मेरे जैसा